The following is for informational and entertainment purposes only and should not be construed as financial advice. This discussion is a presentation by 1031, the leading institutional investor focused on the Bitcoin ecosystem. 1031 has over 10 years of experience in Bitcoin and has deployed nearly $150 million into the leading opportunities in the space. To learn more, visit 1031.vc.
And I think it's no doubt that right now the moment that we're seeing is an incredible moment to bring the first publicly traded Bitcoin financial services company to the public markets, and a company that is specifically there to show Bitcoin's value as a savings asset, to build over time, long-term, low-tide preference, to truly make an impact in people's lives. And at the same time, a company that has focused on day one of building our own treasury of Bitcoin. We'll be entering the market with over 1,000 Bitcoin, and we intend to aggressively accumulate Bitcoin, not only over the course of our daily operating business, but also following in the footsteps of some of those who have laid out the playbook for stacking sats at an even more aggressive rate. And I know we have some people from MicroStrategy here today who we look to as absolute inspiration. And the first insight that we had when we were starting at Bitcoin 2019 was, how can we create the easiest and most accessible way to access Bitcoin, just to start learning? Because that has traditionally been the largest and biggest hurdle for you to access new customers. And rewards, not only from my previous background, but I knew was an incredible way to do that. Not only it's the one of the most widely participated in financial products out there. Almost every household has 3 or 4 rewards programs that they're participating in. And so we saw this as an incredible avenue to introduce Bitcoin in a way that removes all of the risk. And what we quickly saw was, as years went by, some of our customers have earned more Bitcoin in their rewards from their spending than they had in their savings accounts when they started.
Ooh, we are joined by that strapping young gentleman, founder and CEO of Fold, Will. Welcome to Bitcoin Alpha.
It's good to be here, guys.
It's good to have you. We plan to only do this show when we have high signal to talk about. So you are the first episode that we've recorded in about a month and a half, and we like to provide the signal here, and that's why we have you here. And during that cold open clip, you mentioned Bitcoin 2019 when you were thinking of what product would be great for Bitcoiners, settled on rewards. And it's funny, just thinking back, that comment provided flashbacks for me. For anybody who is unaware, Bitcoin 2019 was literally in a parking garage in San Francisco. And it's crazy to think of not only where Bitcoin has come between then and now, the Bitcoin conference, it's going to be in Vegas this year, a large spectacle with tens of thousands of people, but to think of where we've come from that small parking garage in San Francisco to today, not only as an industry, but you yourself as a founder and Fold as a company, I think it's a good jumping off point for what we wanted to talk about, which is your journey to the public markets at Fold.
Yeah, it's definitely a wild reminder, and it's wasn't that long ago, but we look to Bitcoin Vegas 2025 is coming up. It has moved around the country it has grown in size. The types of people showing up, the interest around it it was unfathomable to me back in 2019 that we would be here this early. And I think there's the best part about it is that journey is, we can look to it and say, wow, Bitcoin has absolutely succeeded and look where we're at today. But I think we all on this call knew that it was definitely a journey full of challenges to get here. And I'd say a bunch of surprises along the way. And again, make sure you survive through your Bitcoin cycles, and opportunity will make itself known. And I think Fold has always been really about that. Build on solid foundation, build something that provides value to people today, and continue to build into Bitcoin. And it will lead the way from there, because this is truly no longer a movement confined to a parking garage in San Francisco. This is entirely global, and the game board has completely changed. And so I think that's reflected in Fold's last year of how opportunities have significantly gotten larger and the challenges too have gotten big, but it's a good reminder to think back to the humble beginnings.
Yeah, it's funny talking about cycles. That conference, I remember vividly for many reasons. First conference I ever spoke at. Right before I got on stage to speak, my wife made me aware that she was pregnant with our first child. And then also we were in a bull trap. It was the price, I'm not sure if you guys remember, it jacked up to like $14,000 over the course of the weekend when the conference was held. And everybody was very bullish. Matt and I were telling people to smash buy during our live rabbit hole recap at that conference.
Nothing's changed.
And the price didn't immediately, but slowly but surely fell ultimately to around 3,500 on March 12th, 2020. And so another 80% correction. But to your point, being able to build products that Bitcoiners want, regardless of where we are in the cycle, is very important. That's exactly what you've done with Fold and rewards. And that was another thing that you mentioned in that cold open clip that we showed, is that was a great time, not only to be launching a rewards product, but to be downloading a rewards product and using it to get sats back. I'm sure many of the people that you've observed who have the Bitcoin they accumulated with certain purchases outstrip the cost of that purchase at that given point in time were built during that period, that bear market.
Fold is at the 2019 edition of Fold is very much like any other rewards product that was out there. We just happened to give Bitcoin. And one of the things that we've realized over this time is there are so many consumer financial tools that we use every day in traditional finance that have an underlying economics that disproportionately benefit not the consumer, that benefits everyone else besides the one who's using it. And Fold over the last 5 years has seen, we've been roughly giving away the same cashback rewards level to our customers as they could get on another traditional platform. But because they've earned it in Bitcoin, they've earned it in an asset that has a hard cap, sound money, no issuer. Their lives in many cases have been completely transformed. We have people who have been able to dip into that to meet emergency expenses or to consider a new path for their family in terms of kind of what their financial plan is just off of their rewards. It started a journey for them to ultimately learn about Bitcoin in a way that they demanded from us over these years of, hey, it's not just rewards. Now we're depositing our paycheck. We need to think about building our family, our long-term savings plans. We need to think about how we manage our paychecks on a given month. And we want to do that with Bitcoin because look at what has done just switching my rewards to from miles to Bitcoin. And they start to see what possible impacts it can have. They think deeper about their finances. And if you start to think deeper, you start to think a lot of the tools that you use every day are not really meant to have you be the winner. They need to have you win just enough, and they'll give you some of those scraps. But for Fold and for Bitcoin, we cannot devalue the Bitcoin you earn. We, at the same time, are wanting to provide not only a product that produces different results, but a company that approaches our customer relationship differently. And I think Bitcoin unlocks a lot of that.
Yeah, I mean, I think one thing you're hitting on that we're all very excited about, obviously, at 1031, both as big investors in Fold and investors in the space in general, is, if Bitcoin is, as you're kind of referencing, this apex savings asset, this monetary tool, over time, right? It's not just a question of adoption increasing, kind of number of people using it going up, but also the penetration into someone's life as they start to adopt Bitcoin. Just it becomes this mind virus that you kind of can't stop thinking about, and it starts to become the hurdle rate for anything else, any other investment you might make, any other way that you might deploy your money. And so one thing that you're hitting on here that I think we've been excited to see is just how much you have grown with your users, and your users have kind of grown with you just as that progression takes place in their own financial lives. So, I think it'd be helpful maybe just kind of provide the brief rundown for what that's looked like from 2019 to now, like the key ways that you guys have kind of evolved along with your users. And then how did that kind of get you guys to the point where last year, you looked at the opportunity set and thought, now is the time to take the next step and take the leap into the public public markets?
Well, I think back to our founding story, we were there. We wanted to meet the challenge of building long-term savings for Americans. Personally, I had been in and experiencing this myself. It, I think, is a pervasive, widespread feeling in society today about like, why can't I get ahead? And we were like, could we solve that with the product? And we knew what Bitcoin could do. We had a vision for what it could be and how it could solve this problem. So we started off with rewards to create the most exposure for as most amount of people to be able to start this journey. And ultimately, like you said, they've evolved. They have seen their net worth grow. You know, over 60% of our customers have over 25% of their net worth in Bitcoin today. You know, when they started with us, that 25% might have been 5%. And it is, you know, as their lives have been transformed by Bitcoin, they've needed us to provide that service. It's because really there's not many other platforms around that can really do this for them. And it speaks into our numbers a little bit. And, you know, Fold was there entirely focused on long-term savings in Bitcoin. We stand in stark contrast to other public crypto companies that are about, you know, speculation, gambling, and every other asset to give you an opportunity to strike it rich. We have a very different approach, lower time preference. Let's make savings cool. Let's make it fun, and let's make savings real. And once you embed Bitcoin into the heart of someone's savings, you realize you need all of the tools to be connected and seamless with that Bitcoin, or else it sits on an island and it creates fractures within families about, you know, how can we access our wealth? You know, when can we buy homes, or when can we pay bills? Or are we too over allocated? Fold said, hey, let's make Bitcoin in the center of your financial life as seamless as your dollars are today. Let's remove all that friction. And you'll see exchange platforms typically you are seeing, you know, 80 to 90% of their volume being just Bitcoin buys. And, you know, that will change with cycles and where Bitcoin's price action is at any given point. But Fold's volumes for Bitcoin buys is only 50%. And you're saying, okay, what the hell is the rest of the volume doing? The rest of the volume is directly tied to the day-to-day financial needs of our customers. They are using Bitcoin to pay a bill. They're using it to fund a debit card purchase. They're using it to take cash out at an ATM. They're using it to earn rewards. And so you're starting to see what that number shows you is the expansion of Bitcoin, not just as a siloed savings asset on the side that's not connected to anything else. What you're seeing is what happens when you bring Bitcoin to the center of your financial machinery, and it starts to give you value and unlock flexibility and freedom for how you use your money on a Bitcoin standard. And we're seeing our customers more and more adopt to that need. And the more of these products we release, the more it makes that journey easier for those coming, and a deeper engagement for those that are kind of already there. And so I love the fact that, you know, only 50% of our Bitcoin activity on the platform is from people just straight buying Bitcoin for savings. We love that. We support that. But we're also here to see Bitcoin become a central part of the fabric of their personal financial lives, day to day, month to month, and, you know, decade to decade, because our customers are here. They're building families. They're younger. They're 35, 55. A lot's going on, and they need their financial platform to recognize their commitment to Bitcoin, their position in it, and give them the freedom to live full lives connected to the existing system while we're in this transition period.
That you stoked an interesting question in my mind, which is Fold exists for Bitcoiners looking for a financial services platform that can put Bitcoin at the center, and thinking about where we are in this cycle, what Fold can do now that you guys are a public company. How do you see this evolving over time? Do you see Fold, what is the percentage breakdown of your user base moving forward that is Bitcoiners coming to Fold because they understand that Bitcoin's at the center of the platform, versus people that are curious and just want to leverage a financial services platform that may offer Bitcoin rewards, but it has all these other abilities in terms of getting access to gift cards, getting access to roundups, all of that?
Yeah, I think we've seen previous cycles where you really do not have, the only public company representatives from this kind of side of crypto and Bitcoin have been those focused on the speculative aspects of it and gambling and every other coin. When we looked at moving into public markets, we looked at it from two lenses. Number one, there are obvious benefits that come to a company that is both building a Bitcoin treasury and in a growth market to be a public company. We get access to resources where we can have a renewed look at M&A, about building our Bitcoin treasury out. And that was always exciting for us because we know that Bitcoin cycles, it's incredibly important to take as much ground as possible at each one. There are massive winnings to be had. And so we knew it was important to be aggressive from that angle. But I think more importantly, there was no Bitcoin financial services company represented in public markets that brought reputation, trust, and a different alternative, a different brand, a different approach to this thing we call Bitcoin or crypto. And we thought that the conversation was just way too skewed in one direction about one use case, about the speculation and the gambling side. We knew from our numbers that we were seeing that there was an increasingly large amount of people looking to Bitcoin to add to their savings, and they needed the right on-ramp to do that. And those that have already made this decision are no longer dealing with Bitcoin being 5% of their net worth. It's now 30, 40, 50, 60%. And the platforms that are out there just didn't exist to do it. And those that you could maybe do some things, their primary incentive was to sell you on some other an asset that wasn't there to help you build long-term savings, but move you as quickly into speculating on the next new thing. So we thought that there was a great opportunity to be that brand. We are really at the top of the funnel. We have the easiest way to start your Bitcoin journey. Just load your existing credit card and start earning some Bitcoin. Our audience and customers are families. So we are both used by those that traditionally make the investments in the home, which typically is the head of household, the husband in the relationship. We have the kids that are involved in the rewards side of things. And we're increasingly looking at taking over the entire household by offering ways for people to maximize their spending on their bill payments and their major big purchases, which is typically something from, the spouse of the household. And so Fold has created a product that brings the entire Bitcoin financial picture and makes it relevant to everybody and allows it to be something that fits harmoniously in these growing households that are not only accumulating wealth faster than their peers, which make them very valuable to us in the market, but also are representative of really a pioneer group where we're seeing this trend only continue. And I think we're really at the precipice right now where a new wave of retail is waking up and will make this call. So we're seeing in the numbers very similar to what we saw in 2020, 2021, when we saw 200% plus year over year growth, based on these new entrants coming in to save in Bitcoin. And Fold can accommodate the entire spectrum from the rewards to I'm living on a Bitcoin, my family is living on a Bitcoin standard. And that platform really just doesn't exist in a great way today. And to be a public company to tell that story, I think puts us in a great position.
One of the things I'm really interested to see evolve over time is just how the corporate partners and the brands are thinking about the space now that you guys are a public company, how the nature of how they approach evaluating opportunities to partner with you, how they think about just Bitcoin as a tool for driving growth in their own businesses. We're not talking about a private company that's, had venture funding and may have questionable outlook in its future. We're now talking about Fold as a publicly traded business that warrants being taken a lot more seriously by these corporate partners. I mean, for us, when we initially invested, years ago, the underlying thesis was very simple. It was just that, Bitcoin is this superior savings tool. It's a superior rewards asset as compared to, credit card points or airline miles. And over time, we thought this would be obvious that more individuals would begin to adopt it. But like the next layer of thinking was, at what point do the corporate partners start to realize the benefits of adopting Bitcoin? And in some sense, loyalty programs, over the years and decades have been used. I mean, obviously it's used for loyalty, but it creates this almost locked in aspect of, you get locked into a certain platform. But I think that there's a meaningful opportunity for some of these big brands to actually change their mindset, change the perspective that they're viewing, locking in people in loyalty programs and offering ways to participate in this new and emerging asset class. And I'm just curious, what comments, like what reactions do you have based on conversations you're having? How do you think this plays out with some of these big brands and evaluating it at this point?
I think it's a great discussion, because going back to that parking lot at Bitcoin 2019 in San Francisco, the big discussions were, will Microsoft or Overstock.com continue to add Bitcoin as a payment method? Will they remove it? And that was the big kind of brand, how brands were going to interact with Bitcoin. And it always felt a little off to me, partly because I've built marketplaces and payments in the kind of more traditional world where, hey, I don't need to assume the overhead of a completely new POS system on something I barely understand, where there's only a few thousand back then, 100,000 million addressable kind of customers for this. It just wasn't the right fit. And we always thought rewards was the thing that actually made the right sense, because not only is it a way to bring new customers to these programs and these partners, but also for those that are using these rewards systems, like what the thought was they were going to outperform. And not only they would outperform in a way that they would actually have more purchasing power in the future to be even better consumers of these partners. So they would create long-term relationships with a customer base that had their purchasing power increasing when the rest of the world's purchasing power was decreasing. We knew this would be a great dynamic, and we've been working with some of the top brands, Fortune 100 companies, for 5 years on our Bitcoin rewards network. And so we've been building meticulously brands that are aligned with Bitcoin, but actually more, they love our customers because our customers have money to spend and they're long-term, they're loyal. And they've seen that in the data. And so I think now it's very much understood that there is not only this is a demographic to take seriously, things like the election, where you saw Bitcoin electorate essentially play a major part in this election. That carries over into how these consumer brands see the opportunity. They see it's a movement and identity that they want to be associated with. And so since becoming a public company, however, that has significantly opened up our discussions with them in ways that I thought I understood before the process, but we are now seeing, payout in spades. We're seeing a lot more appetite to go bigger, to learn more, to have more direct conversations about what we can do and collaborate together. And a lot of the space has been de-risked and the value proposition has been kind of identified. And so I think you'll start to see a lot of these brands have more overt engagement with Bitcoin. Ideally, I think we're going to see a lot of that from Fold as a conduit for that, because we've been building those relationships and have a great product for them to carry. But it's going to change everything. Like, when we were first talking, Bitcoin was isolated. Today, Bitcoin is primarily isolated to your brokerage account, the app store, and there's not much else. The only other parts are where Fold has made some inroads is in rewards. That is a major aspect that's been opened up in terms of the fabric of consumer financial tools that they use. And another one is going to be, Bitcoin, why is this global money only being delivered and sold and distributed on these app stores and brokerage accounts? We have the rest of the world we can do this with. And we believe that retailers and these retail partners can become excellent conduits for enabling people to accumulate Bitcoin, not just in rewards, but buying Bitcoin directly too. And I think you'll see there's great, corollaries out there in the market that Costco is selling $200 million of gold every month. And those are to shoppers who are picking up, their bags of chicken, some bread, 5 dozen cans of yogurt, and then they're buying some gold on the way out, right? We think Bitcoin can absolutely play this and achieve similar results because people want to find Bitcoin via places that they are already visiting every day and places that they already trust. Bitcoin is a huge game about trust. And these brands who have built these relationships are going to very quickly be able to take advantage of that and be very successful. And I think Fold's building this network for this many years, showing the results. I think we're in a good position to lead that way for them.
And I think juxtaposing your position in the market with one of the big headlines of the last week, which is this deal that DoorDash and Klarna did for buy now, pay later.
Yes.
For DoorDash meals. So you're talking about extending interest-free credit for a period of time to a user base so that they can get Chipotle delivered to their house. I think when we're talking about brand partnerships and providing brands and users with actual value, this is something that the Klarna DoorDash partnership scares me a bit. Number one, scares me because it sends an economic signal that not all is well if people need payday loans to buy food. But thinking about what if DoorDash did a partnership where instead of extending a quasi payday loan to their end users, they did simple roundups every order. If you want to round up to the nearest dollar and buy Bitcoin with that in the app, that is something that I feel like I don't want to go as far as to say this is predatory. I think it's market pressures leading them to do the partnership with Klarna. But in terms of setting your user up to succeed in the long run, something like Bitcoin rewards makes much more sense than buy now, pay later.
I mean, it's a classic. It's the which way Western man in many cases. What you're seeing, I think that announcement, that is a natural innovation coming from fiat-based payments tools out there. It's like, hey, let's bring the debt much closer. Debt is not just for the larger purchases. Why not absolutely everything? We're already seeing it with credit card delinquencies and debt up at all-time highs. And it is, debt will eat the world. Bitcoin offers this other avenue, and a Bitcoin financial service is built with that other avenue in mind. They are very different approaches. Now, they can use some concepts in similar ways, like Fold will have a Bitcoin rewards credit card, and you're going to earn Bitcoin. But it's been what we've seen in the data is that, over the last 5 years or so, we've given away $75 million in Bitcoin rewards to our customers. Had they used a cashback program, it would be under $20 million. And when you think about that, things like, well, what would happen if everybody instead just had a roundup and a reward built into Bitcoin on all their purchases? What we've seen, and one of my favorite examples is Odell buying a new set of Callaway golf clubs back in 2019. And the rewards on those golf clubs he earned is now worth more than the price he paid. That is what the outcome of a Bitcoin focused or a Bitcoin denominated financial services company, one that thinks in that way versus one that is, hey, actually the solution here is to just immediately turn to debt. And who knows where that experiment's going to play out. I think these are both equal innovations that are pointing to a different world and a different customer ultimately. But I think we're going to find the right combo with the upcoming Fold Bitcoin Rewards credit card, allowing you to spend on credit and earn the Bitcoin reward. I think that brings both of these instruments together in harmony in a way that puts consumers ahead, which is great.
I think this is a point that shouldn't be understated, specifically just as it relates to consumer psychology. I would say from my experience, Fold is like far and away always the easiest sell for people relative to virtually any other kind of way that I could get them interested in Bitcoin, because it takes the negative elements of human psychology kind of out of the mix. But with Bitcoin, it's a volatile asset historically. So it's either kind of ripping or dumping. And those are the times when people are focusing on it. And if it's ripping, it's, oh, well, I missed it. I'll wait for a dip. If it's dumping, it's, oh, I knew it was going to crash. Like this is too volatile and I want to stay away. So if you can turn it into something where people don't have to make the active choice to go buy X amount of Bitcoin necessarily as their first entree, a lot of people still will do that, obviously. But for people who are struggling with that, cyclical view of like, oh, it's going up or it's going down, either way, I'm too scared to buy it. Giving rewards, basically turning Bitcoin into house money, I think is a great kind of psychology hack for people to kind of get over that first hump and start having, a relationship with Bitcoin that is more than just kind of on the sidelines. And so that was actually, I was the perfect segue what you're about to talk about just with the credit card. You guys have proven out that story very, very well with the platform over the past 5+ years. One of the bigger, I guess you could say, gaps or kind of unmet needs in the market today is kind of a more traditional credit card product. Some have existed in the past and have, unfortunately been wiped out by prior crypto cycle volatility. Certainly seems like there's demand for it. Certainly seems like there's product market fit. So just kind of maybe walk through how you see that further scaling up that vision of getting Bitcoin rewards into people's hands, even more seamlessly than before.
Yeah, I mean the credit card is a obviously ubiquitous financial tool that has kind of embedded itself. It is the iPhone and the credit card, right? That's what everyone has on them at all times. And so it really is taking on and kind of redefining one of the bedrock tools that we have. And the idea is, how can we create this tool to reflect the best that Bitcoin can offer? And the first obvious place that we're seeing, not only it's the most requested feature at Fold, we know that it has been incredibly successful in the past. The previous one that existed in the first year, it had over 100,000 card holders, was doing 2 to 3 billion in volumes. It was a wonderful product that really, I think, will become one of the most important on-ramps into Bitcoin, the ETF, spot Bitcoin, and then Bitcoin rewards through cards. And so we know the market wants this. Today, our wait list is, I think we've already essentially met our goal, and we're, haven't even launched the product yet. We still have a little bit to go. So we know that the market is much bigger than it was a couple years ago. We know that this product really has existing product market fit, and I'm just happy that we're going to be the ones that get to introduce it to the world. And I really look at it as a platform versus a product, because once you start looking deeper into the mechanics of how credit cards work, you start to see that Bitcoin can actually be a very really beneficial asset to use in other aspects of the card program. You think of how can you use Bitcoin to lower the cost of capital? How can you lower interest rates by embedding and interacting with Bitcoin? How can you use Bitcoin as a better proxy for credit worthiness than a FICO score? In addition to that, how can you make Bitcoin related to, hey, I want to save entirely in Bitcoin, but I want to spend on credit? Now, if you can create the ability for these two products to interact, of paying off your card at opportune times based on Bitcoin's price, you can start to think of this really optimizing this very old, very embedded financial tool, and just taking the perspective of what can Bitcoin do for this? How can Bitcoin reimagine this financial product? So the Bitcoin rewards card is going to be huge. It's going to be really the first iteration is rewards, but we really see it as a platform that we get to continue to reinvent financial services with Bitcoin. And I'm excited to see where we end up on that journey.
And on that note, we've talked about the stat multiple times through this conversation with Odell's example, the point at which his rewards paid back or were worth more than the golf clubs that he bought. Have you guys ever thought about having like publicly available stats on that? Like what percentage of rewards have eclipsed their original purchase? I think as a firm. That would be cool to see publicly.
We have a few things coming there. What we know is that part of the hypothesis is that by allowing people to interact with Bitcoin every single day in this risk-free way, you can get people thinking about Bitcoin a lot more than they would have otherwise. And that's great for a company because you get a lot of great engagement, return engagement. But it's also great for Bitcoin adoption. We frequently see and hear that people use their experience with Fold as the way they pitch Bitcoin to others. And we've seen that empowering our customers with some of these interesting ways to look at the data that allow them to visualize what happens when you're holding money that cannot be debased in a time when all the other money is being debased at levels that haven't been seen previously. Well, it becomes really obvious. And sometimes you just need things like this percentage is 30% paid for based on the current reward rate that you earned 3 years ago. And so we have a good, we have a whole tab in the app that goes through how much your rewards have increased over the years, what it would have been if you earned it in cash. But we really look at this of how can we actually give these insights throughout the entire experience that arm people with the ability of kind of verbalizing why Bitcoin has changed their life. For us, that's great. And for Bitcoin, that's great.
Yeah, I think the credit card is going to be a blockbuster. There's a lot of people who love rewards, right? They really like the status that they accrue on airlines, or they really like the fact that, they get things for free, without really understanding what's funding it, how does that all actually flow through to in prices that consumers pay for. But I do think a lot of people have love-hate relationship with rewards. They feel like a plus, but also, at least in my perspective, I just think they're really annoying. They are an asset on our individual balance sheets, but they become this burden. It's you got credit card points, you got airline miles. First of all, how do you value them? What are they really worth? I have in my head how much I think a credit card point is worth and how much I think an airline mile is worth. But then you go, okay, well, I think I've got some value here. How do I go use it? How do I tap into it? And generally, there's a lot of friction there. If you want to go book an award flight, you can't do it unless you get ripped off on the fees. And so rewards have become this black box. They purposely are making it more confusing. And if you're talking about a credit card and an issuing bank that's getting you to sign up, you mentally justify it because you're paying a certain amount annual fee, and then they explain to you, hey, by the way, here's all the benefits you're getting in return, and it adds up to way more than what you're paying for it. But I think if you polled a general population, people would not be able to explain, how much do they think they're earning. And that's on purpose, right? The harder it is to understand, most likely you're getting a raw deal.
It's fundamental to the rewards industry. That black box concept is actually supporting the entire thing. And there's a weird anti-consumer relationship that develops from that. There's this concept where I at once want to keep you interested in my product by giving you rewards, but at the same time, I want to make sure you do not amass enough value to actually economically impact me. I don't want your rewards to be worth more. Actually, I'm invested, and my terms of service say I can devalue those rewards as much as humanly possible whenever I want at my own discretion. And you think about Fold's business models, we can't devalue your, so the Bitcoin rewards credit card is coming out. It's going to be 2% unlimited Bitcoin rewards. Once you get that reward, we can't devalue that. So from a standpoint of now, as a company, a traditional rewards company would look at saying, okay, get them the reward. Next step we think about is how we devalue it, because that's how we're going to extract more value from these customers, if we're going to actually make the economics work, what Fold has to do is look at saying, well, what if we turned it on its head? We say, hey, the whole point of this is to build savings. And so if we are building a reward system that builds savings, our benefit is for you to have as much value accrue to you as possible in those rewards. We want those rewards to be worth as much as it can. That means we get to be involved again at another transaction down the line. We get to be involved when you say, hey, Bitcoin did really well this cycle. It's time to take the family to Disneyland, and you use your extra purchasing power to do that, or you say, hey, it's time to buy a home. I have all these rewards. We have thousands and thousands of customers with serious amounts of rewards in there. They're like, now what can I do with it? Well, one thing is you could probably buy a house with it. We want to be involved in that transaction, and so it's just a different perspective that we have with our customers, where we're here saying we want the rewards you earn to be as valuable as possible. Whereas every other rewards program out there actually has the exact opposite intention for your rewards. And I think that starts to show in terms of a sense of transparency, about trust, about that the relationship is right. And so I think it's a good concept of one is on the black box, the other is as open and transparent as possible. And I think ultimately, the transparency version is not only going to keep you ahead, you are going to have more value at the end of the day, but also you're going to feel good. You're going to feel aligned with the company that you're doing business with. And I think that's a really dangerous combination for the competition, the traditional providers of these services. It is, you're getting beat on trust and you're getting beat on financial outcomes. That's a hard thing to recover from.
Yeah. So we generally see in Bitcoin, the earlier that one adopts Bitcoin, the more they have to benefit relative to anyone else. That could be just an individual who decides to buy Bitcoin. It could be a company that decides to put Bitcoin on its balance sheet. I think it can apply to, call it a corporate partner or an airline or a bank that decides to get into the rewards game and participate with you all. And rather than lock people in with their credit card points or their airline miles, they say, you know what, I'm going to allow you to convert your points to Bitcoin, or I'm going to allow you to earn in Bitcoin if that's what you want to do. I think the group that decides to do that first will benefit disproportionately relative to others that decide to follow that trend. And I think there's a potential that we will see that type of trend, that it'll be the first domino finally falls and then more start trickling in, just like you've sort of seen a domino effect on the Bitcoin Treasury company, this strategy, this playbook that now there's dozens of companies that are incorporating Bitcoin onto their balance sheet. I think we'll see that on the loyalty side.
What you point out there is exactly why things will change, because ultimately we can talk about the old kind of reward structures and why it has issues. It's not aligned with the customer and everything, but there are problems for those that are running these programs. There are 30 trillion unredeemed airline miles just sitting out as liabilities on airline balance sheet. They want to deliver great service to their customers, but unfortunately the way economics and inflation are happening is the last thing they want you to do is get on an airline. That's the last thing, because it's the most expensive action you could take. And so they're looking for ways in which to deliver value and a bunch of other things. So it's not that the world is excellent even with the existing system that they're benefiting off of. And so I think there's going to be a lot of opportunity to look at two sides of it. Is, number one, hey, allowing people to earn Bitcoin, build their savings. We can be a relevant financial brand. If we do that with them, that's great. We can attract great customers. But we also have all these liabilities on our balance sheet. What if some of that was in Bitcoin? During COVID, the airlines took out massive loans against their Bitcoin or their loyalty programs to prop them up when nobody was traveling anymore. You start to think about what could have also happened at that, that crash to 3,500 that we were just talking about, or the major COVID crash for Bitcoin. if one of those airlines had decided to allocate 10% of that liability into Bitcoin, I think they would have seen themselves the power of getting in early and growing your purchasing power amidst the world that is, inflating. And though we're gonna see it happen like a trickle, but I think all of the things are in place. There are great, respected, trusted brands like Fold that are there specifically to help them make these transitions. The market and regulatory environment is very, very different. And so I think the conditions are fertile. It's going to, again, take one or two of the kind of first movers who will get the majority of the benefits of making that move to come out. And I expect that's going to be a 2025 thing that we see, a major move into Bitcoin rewards from an existing leader in rewards. The Delta Airline Miles card processes 1% of US GDP. These are massive programs, and they're driven by people chasing airline miles. They're driven by people chasing the status and the rewards of airline miles. And I think Bitcoin fundamentally provides a better value proposition that actually delivers on status and delivering value in ways that it's going to outcompete. And it's going to be obvious in terms of consumer preference, and the airlines and other loyalty providers are going to understand the benefits to adopting Bitcoin in a couple ways that are going to be definitely a gradually then suddenly moment.
I mean, it's a huge operational and marketing differentiator too, right? With very low downside. You think about to the airline business, a famously difficult, highly competitive commodity business, basically like kind of a seat is basically a seat. So you've had the growth of these rewards programs partially for that reason. You've got Starbucks obviously going through, a massive loyalty program, but going through real difficulties over the last couple of years and figuring out, what's the next phase for the company, and the rewards experience is a huge piece of that question. Like what do we want the identity of the brand to be, and our interaction with users in that way. And so they kind of, they're looking for a shot in the arm right now as well with the new CEO and restructuring going on. And so you look at these different stories, and it just seems like a very strong risk reward skew in favor of Bitcoin rewards for industries and companies that are already like very much in need of, something like that to inject some new life into the business and the story that they're telling to their customers.
I, for one, somebody who bit the bullet and got the American Airlines credit card, would love this. Because you get the status, and you know what? I think everybody got the credit card in the last year, because you get the status and you get on the wait list for first class, and you're like number 15, even if you're up to the highest echelon of American status. I'm in Austin, American hub, fly to Philly, fly to New York, flying American all the time. It's like, might as well get the credit card and do it. And then you get the points. And the only thing I spend them on is Wi-Fi. They don't make it clear that you can, when you're checking out for a flight, maybe I should start. Maybe it's just me personally, but I'm never like, maybe I should use my points for this. It's only after the fact I'm like, this is one of the flights I could have used points for. And I just end up not spending them. And then, as we've seen throughout time, there's likely an inevitable point in the future where they get devalued for some reason or another. And I just left that money on the table. Like, versus the fold card, mixing up portfolio companies.
Great Bitcoin products, both.
Looking at the app, it's like, I can see my points, quote unquote points, my rewards going up in value over time.
Yeah, it's like there's 2 points, right? It's like the negative aspect of the black box, and then they also create so much friction. So generally, whenever there's low friction to use your points, you're also getting ripped off. And so to get the most value out of it is very difficult. They'll let you monetize it somehow. You can just look on American Express on their rewards, and they'll show you can check out on Amazon, but they'll give you 50 basis points, whereas if you tried to maximize the value of it on travel or something, you might be able to get twice that. But they'll make it very easy for you to give away your points at a high margin to them.
I think where it all ties back is that actually these airline miles airline programs are actually under Department of Transportation investigation right now. And the root of the investigation, it basically says airline miles have become so important to the fabric of American society in terms of how they relate to these miles, that people use them and they think about them as savings. They use it as almost their travel savings account. That the argument is the fact that you are debasing them is now debasing a core savings component of the American people. And so this is where it got this was specifically under the Biden administration. I expect these things might go away, but really what it's just pointing to is that people right now are very hungry and need to maximize all the ways to build savings in this world. It's no longer a nice to have for my savings account. It's so important that, hey, if I don't get these miles, my family's not going on vacation. That's going to really lead to other problems in your life. And so we are seeing that people are hungry for building value, and we're trying to get creative on a lot of tools. Now you're going to see innovations like the Klarna one, where it says, hey, instead of spending anything, just go for free and deal with the problem later. But really, I think consumers generally are getting smarter. Those that are waking up are getting smarter about the tools that they use and what's going to ultimately get them to the place they want to be. And I think they're hungry for new tools. And I think Bitcoin rewards will ultimately become one of the largest on-ramps into Bitcoin. And it's mostly because number one, a lot of people don't have any money to put into savings. So they're not even at the point of I want to adopt Bitcoin. But this specifically can reach an entirely new segment of potential Bitcoiners that can start their journey in a way that people are already looking at these as their savings accounts. We just follow up on it and make it into a real savings account. So I think it's ultimately just a major opportunity at the right time when the world is hungry for alternatives. And so I think Fold is in a great position to be kind of at the tip of the spear leading that. And that's a big thing to win.
This theme of incentive alignment between you guys and your users is maybe a good chance to segue into another big topic for the Fold story. You guys have a great kind of tagline on some of your marketing materials recently, where it's like, you stack, we stack. You guys want to help your users stack as much Bitcoin as possible, so that you guys can in turn stack as much Bitcoin as possible on the corporate balance sheet. So for those that aren't aware, Fold, under ticker FLD, is now a top 10 U.S. Bitcoin treasury company. With the latest update from a couple of weeks ago, you guys are close to 1,500 Bitcoin on the balance sheet. And in that opening clip that we played, you mentioned wanting to kind of aggressively continue to pursue that strategy, which you can only do if you continue to satisfy users and grow that user base. And so, just curious how, high level thoughts on what principles kind of guide your approach as a company to building that Bitcoin treasury, and why are you so excited about that as a lever for the Fold story over time?
I mean, if our main goal and mission is to build long-term savings through Bitcoin, and we were a company and I was a founder that didn't have our own personal reserve in Bitcoin, it would feel backward. It wouldn't feel right. And a lot of this has actually flown through my own experience, is that, I have been living on Bitcoin Standard for a long time. And I wanted to find out, what's an easier way to have people kind of get to this state faster? And that's was the reward strategy to do that. So personally, I've always been deeply invested. I'm here to support my customers to do the same. And, Fold as a company has always had a treasury strategy from day one. If we are here because we believe Bitcoin is the fastest growing network and is the best performing asset today and will continue to be, it would be foolish not to hold our own value in Bitcoin. The outcome of that would be we have accelerated Bitcoin adoption, but all of our customers all of our competitors got wealthy because we didn't hold any Bitcoin. It would be very backward. And so I think it is both a testament to our commitment to incentive and alignment with our customers. We practice what we preach. It's also a deep belief of what we believe will be true about Bitcoin and its adoption trajectory. And in the past, holding our Bitcoin on our balance sheet has been incredibly, incredibly helpful, and times coming close to saving us, where because we have held it for so long, we extended our runway quite a bit. We were able to make choices in the past that at times we may have been way more defensive and thought a lot smaller and gone inward and not achieved some of the growth goals that we had. We were able to either maintain status quo or get more aggressive because of that treasury. And so we've always had elements of that. And as we've moved into a public company, there are other benefits that, accrue to businesses that are building a treasury, like we've seen with the Semler and MicroStrategy. But I think at the end of the day, Fold is still excited to take advantage of those tools to build our treasury, to leverage our equity, to bring more value to shareholders with Bitcoin. We just did that with a convert not too long ago, and we'll do more. But I think more central to our story is that this is the only thing that makes sense. This is how we are aligned with our customers. This is allows us to show the skin in the game of our vision for the world and what the world will be in the future. And there's not much more we could do to demonstrate that. And so I think it brings a level of authenticity, of trust that's important for us in addition to the value that we have. And even before we became a public company, we really were thinking a lot about our treasury of we're building Bitcoin denominated financial services. When you are holding people's money, when people are holding their money in Bitcoin and using services to either use that Bitcoin in various ways, there's a lot of things about the traditional financial system that don't really work because they're fiat denominated and trying to be applied to Bitcoin services. So we always thought that also the treasury would, be the backbone of allowing us to build the new framework and tools and services to make Bitcoin services better. Bitcoin denominated insurance, Bitcoin collateral and loans, driving down the cost of capital, being able to sell Bitcoin more efficiently. Having a large treasury will increasingly give us the ability to add more value to our customers because of that treasury and have a better business because the economics are going to be better. And so, first and foremost, we hold Bitcoin in treasury because we believe Bitcoin is superior money, and that is the only thing that makes sense to hold our long-term savings in. The second is the new wave of Bitcoin financial services will require large pools of Bitcoin to be able to augment these services. And the more you can do that directly, the more benefits will accrue to those who own both of those elements. And then thirdly is the drive more value to shareholders based on this kind of the what we've seen with the likes of Strategy and Semler and others. And so I think we have a nuanced look about our treasury, but it really just reflects where we've come from. Always have been building a treasury, being aligned with our customers, and ultimately trying to build the best Bitcoin financial services company. And when you think about that, you have to have a treasury, and it has to be big.
Yeah, I think those are all great. That's a comprehensive answer. All arguments we agree with. That second one, though, I think is one that most probably just don't appreciate or haven't been thinking about. You're seeing the trend in the public markets right now of all these companies announcing their Bitcoin treasury strategies and a lot of people wanting to jump on the bandwagon. And I do think there will be some positive impact to the companies of that, not just because they will hopefully accrue that value on their balance sheet that grows over time, over the long term, but it will also allow them to really start to appreciate the opportunity cost that is Bitcoin, right? Like if they're holding Bitcoin on their balance sheet, then even if it's a company that fundamentally has nothing to do with Bitcoin, perhaps they'll be making better capital allocation decisions going forward. So there should be some positive externalities to that. But at the same time, it is something that I'm curious to see how it evolves for some of these companies that are just, announcing their Bitcoin treasury strategies. And is this going to become some potential exposure to them because they've taken on leverage in ways that they or the market don't fully understand that could flip upside down on them. But that being said, we think that the most interesting aspect of that second argument is just the way that Bitcoin can become productive for a business, how it can, how you could use it to attract better financing, better rates, offer better services that you otherwise could not have. And I do think that that's an aspect of the Treasury strategy that most people overlook.
Yeah, I think, there's going to be a lot of things that come out of this, right? I think you're exactly right. Anytime you're getting this kind of rush, like we're definitely seeing, it's going to come with, there's going to be people on the spectrum there that are going to get flipped upside down, right? We have cycles, and it's a hard thing to manage. But the pure focus on Bitcoin for share, I think it's good and it makes sense for many. But I think there's also opportunity here for us to develop a metric and a way of looking at our treasury as being accretive to the operating company, so that like what efficiencies, what new margin has our treasury brought to our operating company, and be able to show that and expose that to tell our story. Because I think right now we are focusing on one small, but obviously big in terms of volume, part of the Bitcoin treasury story. Ultimately, and the best part is not many are thinking about the Bitcoin treasury in the way we're talking about it here today. And so I think that's really where our edge is going to be. It's going to show up in how we make decisions, how to build our treasury. But I think it's incumbent on us as kind of first movers here is to make it transparent about what is the value here. And as we're getting to report on that, I think that's going to drive a whole nother, wave of companies that are looking at the treasury, not just to maximize sats per share and leverage yourself up, but also, this can give us better products for our customers. This can get us better margins for the company. And that will lead to its own push to integrate Bitcoin in its own way.
Yeah, I mean, I can't stop thinking about the airline example. Like, imagine if they were to replace points with Bitcoin rewards, and they were able, maybe that's how they go about stacking Bitcoin. They take their cut from the rewards program, put it into Bitcoin. Over time, they accumulate enough to get a lower cost of capital that they can then go and reinvest in a product and service that desperately needs reinvestment. I mean, it's pretty clear that the airline industry is one of the dogs in terms of the quality of service and its decay over the last 2 decades. And you think about entering Bitcoin as a tool to lower cost of capital, to introduce that opportunity cost that Grant was mentioning into your decision making. And then if your clients are coming to you because they want the Bitcoin rewards, all right, you got a bigger base, more capital, let's make the product better at the end of the day. Like a simple example like that. Maybe we're idealist here, maybe we're a bit naive, but I think we've seen it enough at many different levels from our perspective at 1031, watching many companies develop a treasury, extend their runway, reinvest, Fold being a perfect example of that. 1031, we hold Bitcoin on the balance sheet. It's helped us out immensely as we reinvest in our business. I've seen it with TFTC as well. And I think that is replicable beyond just the Bitcoin economy. And I think over the next few years, we're going to see that begin to play out. Obviously, like you mentioned, similar strategy doing their thing, but I think really bringing it back to the operating business is going to be the next progression of this theme in public markets specifically.
And to talk about how it's all related, right? So Fold today helps people essentially build their Bitcoin treasury for their household. But all the same tools are used by businesses, right? So exposing Fold's existing product set, business credit card, business checking account, payouts, business debit card, rewards, and operating your company, your business. One of our most requested after the credit card was our business suite. Say, I want to operate and start building my Bitcoin treasury for my company. And we have $1 million in receivables and payments per month. We can earn a lot of rewards that way. We have our revenues that are coming in that we can balance between Bitcoin, and these services just don't exist yet in really mature ways. But by the end of this year, they certainly will. And all these things just are kind of will trickle down deeper and deeper into something that is conceptually true and a good thing to do, to being a couple clicks set up and you're off to the races. And, that's where we think Fold can also kind of have this loop of, our treasury is also going to help you build your treasury. And again, that incentive alignment and nailing that, because we know the appetite is out there. And so airlines will come. But first, our Fold customers, a lot of them are entrepreneurs, business owners, and are eager to do this right away. And, it's going to be one of those you're seeing, at the bottom up moving, and just the top down is also making, there will be some, early movers there. And, soon Bitcoin will eat the world. And I don't think that world is very far away.
Yeah, absolutely. Well, look, I think before we shift gears in terms of conversation, I think this one, like the discussion about Fold, has been great. I mean, one of the things I really love about Fold and our involvement with you guys has just been that you all have continued to evolve and grow with the market. Yet our original thesis when we first invested still very much remains intact. If I would have written it down on a napkin 4 or 5 years ago, whenever we first invested, I think everything that I would have written on that napkin is still the exact same.
Yes.
And we're very proud to, I don't even know what the count is at this point, like invested in you guys 4 or 5 times, and continue to grow our involvement and participation with you guys over the years, and get involved with the public listing, and now even involved post that at the board level. So we couldn't be more happy with supporting you guys and what you're going after, and excited to see where it goes from here.
We absolutely mutual. I don't think we could have imagined the partners that 1031 has become to us, and absolutely not just pivotal in being there in terms of moments when we want to expand, and you helping unlock the capital in which to do that, but also the attention to the product. And helping us open other doors that, I think Fold's story, while we're telling the same story, we're just telling it on a massively larger platform than we have prior. And I think that has a lot to do with the partnership and collaboration we've had with 1031. So it's been a hell of a ride, but wouldn't have wanted to do it with anyone else.
Feelings mutual. It's been one hell of a ride. It's only just beginning. To a certain extent. So this is just the beginning for Bitcoin, for Fold, for 1031. The possibilities are endless, and I think it's almost Will, you don't have to stay on. You're a very busy man. We're gonna talk about other topics, particularly this shift in perspective on the industry from DC specifically, but it's I don't want to say it's unnerving, but it's like, holy crap, I can't believe that things seem to be as good as they are right now in terms of where Bitcoin is from its institutional stamp of approval and the positioning of Bitcoin at the federal level and at the state level here in the United States, where it seems like this current administration is very willing and eager to implement Bitcoin into what they're doing. And it's almost poetic that we're here talking to you and talking about this topic too. You're transitioning to public markets, really taking it to a larger audience, but Bitcoin, the asset, has really taken that next step into being taken seriously on the geopolitical and at the federal government level. And it's really our time as an industry to level up and meet the sort of demands of Bitcoin being in the spotlight. And
it's a much bigger thing. I never thought that my first time going to DC would be to get in a room with a bunch of senators talking in earnest about Bitcoin as a strategic policy and defense tool. and yeah, there I was. And so I think it's been a phenomenal journey. But we're definitely not in Kansas anymore, as they'd say. So guys, it was great to be here today and chat about Fold and Bitcoin. I'll let you to the larger topics that you're getting to.
Thank you, Will. Keep crushing it, brother.
To you all.
Will Reeves. What a gentleman. What a stud. No, it was funny because he was in DC. Grant, you were there. Matt, Jonathan were also there. But again, that's a couple other things we wanted to touch on while we're recording an episode is some stories from the road. And I think the most recent trip where multiple of us were in the same place was DC at the Bitcoin Policy Institute event co-hosted with Senator Lummis, really trying to shift the Overton window, particularly about the Bitcoin strategic reserve and ways in which the government could go about acquiring one, why they should do it. And as I mentioned right before Will left, it was crazy being in that room. Will mentioned it with senators, and you had Ro Khanna, obviously Senator Lummis, Senator Justice from West Virginia, one of the representatives from Alaska, all up there saying we're all in on Bitcoin. America needs Bitcoin. And it was honestly surreal seeing that level of discussion in DC, especially considering what the discussion was like only 6 months ago when Biden was in office.
Yeah, I mean, we are.
This is Grant's favorite topic, by the way.
Yeah, so this is a politics show. So politics is Grant's favorite topic. He loves it even more than Bitcoin. So that's why we want to make sure we always hit on the politics while he's here.
I'm ready to chime in.
But I mean, yeah, like 12 months ago, like the two constituencies in the federal government were those that essentially couldn't pronounce Bitcoin, right? Like they, had no inkling of understanding of what it was other than, digital tulips, like maybe. And the other constituency actively wanted to kill it, and push it offshore as much as possible and attack Bitcoin mining and attack any company, even at the banking level that was, doing business in or around Bitcoin. And so, yeah, it's certainly wild that basically 12 months later, you've got bipartisan consensus that Bitcoin is strategically important and something to take seriously. And a lot of it's pandering. Yeah, a lot of it's just going where the votes are. But it says something that Bitcoin is even enough of a voting block and a voting issue that they feel that it's profitable politically to spend time doing that and to coming to, events like the one that Bitcoin Policy Institute held in DC. So pandering or not, it's certainly a very fast sea change that none of us were expecting.
It is. And I don't agree with all this guy's policies. I believe he was out there talking about putting a wealth tax on people earlier this week, but Ro Khanna spoke at the event too. And that he honestly, his presentation or speech, whatever we're calling it, was the most refreshing because it was just like straight to the point. Like, Bitcoin is technology. I don't know why we're having a big fight over this. Of course, the United States should embrace technology. And I thought that was an incredibly succinct and profound way of positioning Bitcoin in DC. And as I mentioned, don't agree with all these guys' policy. And obviously I'm incentivized and for him to pump Bitcoin, but earnestly, that was the most refreshing take on Bitcoin I've heard from a politician in some time. It's just technology. The U.S. should be leveraging it.
Yeah, no doubt. Look, there are 100 angles we could attack from DC last week. I think one that's maybe in Bitcoin circles flown under the radar just a little bit is Paolo Ardoino, the CEO of
Ardoino.
Excuse me. I'm an idiot American, so he's going to have to forgive me for my mispronunciation. But in any case, making the trip over to America for the first time ever to give a great talk with Jack Mallers of Strike on Tether, their strategy, how he thinks about what they're building, and through all of that, also, indicating that they still view Bitcoin as kind of the apex asset, despite having hundreds of billions of dollars of Tether minted over the last 5+ years. And it's just notable, given that he would feel the need to do that, the desire to do that, given who the Secretary of Commerce is, and Howard Lutnick and his firm's relationship to Tether and custodying their many treasuries, and the fact that some new data last week showed that Tether was the 7th largest net buyer in the world of T-bills last year.
That was insane. They jumped up they were 16th in the world the last time that list was made public, and to jump up 9 spots in less than 2 quarters is insane.
Yeah. I mean, I think there's some nuance between like the total amount of like balance sheet treasuries they have versus like just what their net buying was last year. But either way, right? Like, I mean, being top 20 here as this kind of, digital pirate ship thing that launched, just a few years back, and, China, Japan dumping treasuries aggressively over the last 10 years, including last year, while Tether is, just coming on stronger than ever. Whether you like it or not, whether you like stablecoins or not, I think we're all decidedly neutral on the value of stablecoins. Like, that's not really the point. It's pretty clear from recent signposts that there's a lot more interest in DC in how, I think Paolo even said it in his talk, how Tether can extend dollar hegemony, globally. So, I mean, that's not directly a Bitcoin take, but given that Tether is one of the most aggressive stackers of Bitcoin in the world, it kind of is, right? Like, if you're bullish on overall Tether volume expanding, and minting of Tether expanding, that's a pretty good one-way valve into Bitcoin likely over the coming years.
Yeah, really pulling on that thread of Paolo, he basically came to the event and put forth his argument for why Tether should continue to exist. For anybody who's listening who's unaware, there was an article in the Wall Street Journal a couple weeks ago, and it has become abundantly clear that Circle, based in the U.S., Circle and Tether have 2 very different trajectories, launched not too far away from each other, but Circle went the route of becoming as compliant as possible, integrating itself into the banking system, checking all the boxes from KYC, AML, SOC 2, all that. And it seems like they're a bit butthurt that Tether's significantly more successful than they have been to date. And then you have Tether, which, as we mentioned, has been this quasi-pirate ship purveying the waters of global dollar markets for the better part of a decade now, or more than a decade. They launched in 2014, so almost 11 years now, and has taken the market by storm. It's a $146 billion market, I believe, right now. And Paolo is basically saying, you may not like us. There may be a lot of theories about what we do as a company. However, the proof is in the pudding. We are on the ground in these places around the world, providing people with access to dollar instruments in the form of stable coins. And one thing I can tell you from being on the ground in these places is that we are directly competing hand to hand with BRICS nations that are trying to get their digital currencies into the hands of the people that we're coming into contact with in emerging markets and in markets with high inflation rates. And so his pitch was essentially, if you kill us, you're basically taking out boots on the ground in these emerging markets where BRICS countries are directly competing to get their digital fiat instruments in the hands of these individuals. And so if you want the American dollar to remain the reserve currency in the world, in these places at least, you're going to need Tether and our boots on the ground. I thought it was actually beautiful, and the anti-ESG, anti-woke capitalist in me was cheering him on, because he said you have all these NGOs that have spun up and really beat the drum of, we're going to solve the banking situation in emerging economies. We're going to bank the unbanked. We're going to make sure that these people have access to financial tools, but they literally have nothing to show for it. Whereas Tether, I believe the stat that was thrown out there, has spun up 400 million wallets globally, and that is 400 million wallets that have had access to dollar instruments in the form of stablecoins. And then obviously the demand that giving these people access to stablecoins produces for treasuries is something that is top of mind of the U.S. federal government as they try to figure out what to do as you see this multipolar world beginning to form where sovereign nations that were once strong buyers of U.S. treasuries are beginning to dump them.
I think it's a strong argument, a strong message, and they're clearly flexing their muscles. I think also advertising on Twitter and putting that USD.cool website and sort of like effectively marketing to, I mean, I don't know what the target audience of that was, if it was beyond just US Twitter users, but like that to me seemed like a little much.
I think it's the politicians, right? Because you have these two acts, Stable and Genius Act. I believe the Stable Act would sort of cut Tether off at the knees. They're trying to signal like, hey, politicians, be careful which bill you actually pass, because if it's the wrong one, you're not going to have a foothold in all these markets that we're in anymore. And it's going to be very hard for somebody like Circle to go do that, especially considering the KYC, AML sort of straitjacket that would be thrust onto the market with the stablecoin or the stable bill.
If I'm at Treasury Department, or if I'm a politician, kind of thinking through some of those dynamics, I hear Paolo say something like, we have decentralized the holders of U.S. debt, right? And he made a great point in the fireside with Jack that, with China, with Japan, with any sovereign, effectively a guy, maybe a committee, wakes up one day and says, you know what, it's not in our interest to hold so much U.S. debt. Let's diversify into other assets, gold, whatever it may be. With Tether, if they're spread across the world with millions, hundreds of millions, eventually of holders, of individual holders, the same dynamic does not play out, right? So that can be, especially if the product continues proliferating, a valve for treasury demand that can't just be kind of unilaterally turned off overnight or over the course of a year or something. If some sovereign decides that it's no longer in their interest to hold treasuries, given, for example, what they saw with Russia's treasuries a few years ago, right? So the reaction function to news among Tether holders is going to be very different, and thus Tether as well. And so, if I hear that, and I hear there's effectively growing demand synthetically for a wave of new U.S. debt in a world where a lot of my holders I've been relying on for the last 30 years to fill that role is kind of declining. I'm interested in not cutting off at the knees that offshore market for potentially like trillions of dollars of new issuance over time, especially given how much debt needs to be refinanced in the next couple of years.
Yeah. And to be clear, stablecoins are inherently unstable. They run on the dollar, and Bitcoin is certainly distinct from stablecoins. But with that being said, as we mentioned, there's been clear product market fit, and at a time, especially with tariffs going on right now, you can easily see one country who is finding themselves on the wrong end of a Trump tariff because he doesn't feel like we're getting a fair deal, saying, you know what, we're going to get back at you by dumping our treasuries, like having that latent demand. And it's only going to be increasing from here as other central banks and governments continue to debase their currencies. The dollar milkshake theory is that all these currencies will fail up into the dollar. And if you're the U.S. government and you really care about dollar hegemony and you want to make sure that they're failing into the dollar, you better make sure that you have instruments to make that as easy as possible. And it's inarguable that Tether running on Tron is the way in which many people in emerging economies get access to the dollar system. They download a wallet and either exchange their fiat currency for Tether or have somebody send them Tether straight into a digital wallet.
Yeah. So, I mean, look, it's We're not entirely a politics and stablecoins podcast. We're all Bitcoiners at heart. We run a Bitcoin fund. It's our bread and butter, and we think remains the most interesting, compelling investment opportunity, both the asset and the ecosystem in general, over the next several decades. So none of this should be taken as stablecoin apologia, more just a clear recognition of where the winds are blowing, and acknowledgement too that could have potentially positive downstream implications for Bitcoin over time. Though the flip side is, I'm not sure any of us are highly enthused about further finding a new valve for funding runaway fiscal excess at the federal level, which may be the unfortunate knock-on effect of a proliferating stablecoin market.
Yeah.
Well, I mean, one of my takeaways over the last several weeks was, first when BlackRock filed for their ETF, right? It was like, oh, well, the suits are coming, right? This we've been waiting for it, and people were really expecting the suits to just infiltrate all these Bitcoin events, and sort of my Bitcoin events, the Bitcoin ecosystem, Bitcoin just as an industry. But one of my takeaways over the last several weeks was it's sort of like the other way around, that the Bitcoiners are infiltrating these suit events. And it's like the DC, whether or not it was a lot of pandering, I do think there's some politicians that clearly understand Bitcoin to a pretty advanced level. Others are just being rallied by people to pay attention. And, we were at the Cantor Fitzgerald technology conference in New York, and I mean, I ran into more Bitcoin people there than I used to run into, like people that I knew in the traditional finance world at just typical finance conferences. There was a ton of Bitcoin people at this suit Wall Street event. And that just made me think, actually, like, we're just becoming more relevant, and naturally over time, there's going to be more involvement in some of these different areas, whether or not it's a positive or negative thing. I think, I don't think you say one way or another. It's one of those, but it's just over time, there's going to be more activity that way.
Yeah. I think that's certainly true. I mean, Matt said it on Rabbit Hole recap 2 weeks ago. I got in trouble. People weren't happy with the framing, but we are the swamp now, which is hilarious framing. But it is, I think, particularly as it pertains to the industry's interfacing with DC. I mean, we've said this on many different shows, but it bears repeating, especially during the Biden administration. As you mentioned, 12 months ago was a much different landscape than it is today. And I think the industry has become really wise to the fact that you may not care about political power, but political power definitely cares about you. And with that truth in mind, like if political power cares about you, you better put your best foot forward to make the case for Bitcoin and fight and elbow, get your way into the room to make sure that they don't blow this opportunity, not only for us as individuals, us as an industry, but America more broadly, because Bitcoin presents an incredible opportunity for the country. If the government does anything and just lets us alone, lets us do our job funding companies, and those companies going out building products and services to get Bitcoin into more hands and products, America will be just fine. The SBR, if and when it ever materializes, that's just icing on the cake for letting individuals, companies get Bitcoin into the hands of everyday Americans. And we mentioned it with Will, the sort of fork in the road that we're seeing, which way Western man. The example with Will was DoorDash, Klarna's partnership versus Fold and what they're doing. DoorDash, Klarna, sort of exacerbating the high velocity trash economy and pushing people further out on the risk curve by taking payday loans, and Fold sort of trying to bring people into a lower time preference, less risky. Believe it or not, many people don't believe it's less risky, but time has proven that it is less risky mechanism of accumulating Bitcoin slowly but surely over time, whether that's via rewards or roundups, to make sure that they have better purchasing power. But John, you and I were in New York, And I think we had a conversation that showed the fork in the road that exists in Bitcoin and broader crypto about the future and the opportunities that exists for both Bitcoin as a distinct industry and crypto as its own industry that sort of has different types of end consumers that they're targeting and ways of monetizing that are distinctly different from what's happening in Bitcoin.
Yeah. Marty and I were at a dinner in New York, sitting across from a respected, well-regarded, and successful kind of trader within broader crypto. And, the thesis he was pitching to us, which frankly, I don't unfortunately entirely disagree with, is that, the next big meta to invest in crypto broadly, or just anything, is kind of the gamblification of everything in society. So taking kind of the sports betting, prop betting mantra, that attitude, and extending it to just anything. You kind of see this with the growth certainly in meme coins, but also 0-day to expiry options that have proliferated in the last few years. People just kind of wanting that hit of gambling on everything that they do in their lives. And, to maybe to illustrate the point, I told him initially, I hear where you're coming from, but certainly feel like we're probably in the 8th inning of that, given if anyone's following broader crypto, and I don't necessarily recommend you do, but there's a meme coin platform called pump.fun that allows users to spin up meme coins. Unfortunately, very sadly, in the last month, someone took their own life and did that to basically generate a meme coin, and a meme coin was made out of that very sad event. I told him, well, if you're seeing that, then that's got to be the 8th inning of this kind of gamblification, kind of trash economy, instant gratification mindset. Surely we're kind of coming up on the end of that. And his response was, no, we're in the 2nd inning. You'll know that it's the 8th inning when thousands of people are doing that. Right. So a very kind of dark outlook for where a lot of society may be going. And unfortunately, in the short term, I don't necessarily know that he's wrong on that. If people are doing layaway installment burrito financing, right? Just to get by, drowning in debt, feel like they, can't achieve anything resembling the American dream, feel like a house is out of reach for them, feel like, a marriage and kids is out of reach for them. Then yeah, you'll see, I would expect you've seen this in prior, kind of societal collapse episodes, not that we're necessarily anywhere close to that, but as things kind of deteriorate in people's lives, they want to take the one shot quick bet to riches, because they feel like they don't have anything to lose, and so there's a thesis that says let's build basically tools to kind of fully just enable that growth in degeneracy and gambling, and that may well be kind of profitable in the short term. And then there's the lower time preference kind of Will Reeves type thesis, which says another life is possible. Let's see if we can build on the soundest asset that mankind has ever discovered, or has ever been invented, and build out a fairer monetary system, financial system, and greater opportunity set on top of that. And so I think, I tell that story just to indicate that's kind of the tenor of, I think, where we found things over the past few weeks at a lot of conferences and a lot of our travel is, there's definitely still, a desire for the one-shot path to being a billionaire. The yield conversation, the crypto yield conversation is stronger than ever. Seems like people did not learn a lot of lessons from past cycles, unfortunately.
No, they did. They're just implementing them.
Well, they're going to implement it better, right? Real crypto yield has never been tried, right? Just like real communism and various other real things that have never actually worked out. So that conversation is still continuing, but it just highlights I hate to say we're so early. It's such a meme, but I do think we are quite early in society and financial institutions, big pools of capital, kind of understanding what the long-term play is here. Do I want to invest behind a couple of years maybe of a one-shot path to riches that probably has a negative expected value because vast majority of those will end in zeros and tiers, or do I want to look at what's happening with events like the BPI conference, with the SBR executive order, with the way that conversations are moving at the highest levels of governments around the world. And do I want to look at maybe how Bitcoin plays into that, what that means for the pathway for the monetary system over the next 100 years, and maybe invest behind that much stronger, more pervasive, longer lasting theme. So that's as I see it, that's kind of the big differentiation from a lot of the conversations we've been having the last month or so.
Yeah, that's pretty consistent also with what I saw at the Cantor conference. I mean, even though I ran into a lot more Bitcoin people there than I ever expected, the conclusion wasn't that, all right, well, people found the Bitcoin signal. Like, another conclusion was that, crypto's back. And I mean, I was listening into discussions. There was one in particular where if I closed my eyes, I could have sworn I was listening to Sam Bankman-Fried, like the word salad, crypto mumbo jumbo nonsense about, wallets and tokenizing real world assets and, all the solutions that they've found for expanding crypto use cases. To me, I was convinced that this time is not different. The people in the space will not make the same mistakes, but they will. They'll make similar mistakes or variations of the mistakes that have been made in the past. And where have we seen those? We've seen those with people not understanding counterparty risk and not understanding leverage, and especially combinations of both of those two. And so I think we'll see it again. But, at the same time, we saw some data earlier today from Carta on fund performance, which we haven't fully digested yet. But I would say overall, as would not be too surprising, private capital funds have not done terribly well over the last 5 to 7 years, particularly vintages from 2020 onwards. And I think there's going to be a pretty significant distinction between, those that have misallocated capital and hopefully groups like ours that, I would say, if you look at the top decile benchmarks out there, they're not very impressive, and would suggest that we feel very good about how our funds are performing relative to those benchmarks. And so I think over time, people will start to realize that there is a difference, and taking a longer term approach and fundamentally investing behind first principles, businesses that have sustainable business models that can actually make money, the pendulum will swing back. It may not be swinging back in the mainstream mindset just yet, but over time, I feel pretty confident about it.
No, I know we got to wrap up soon, but I do want to touch on this real world asset and the reemergence of DeFi, staking, yield, collateral that is manifesting in broader crypto, because I think it's, to your point, Grant, going to be a massive kerfuffle for a lot of people, because the lesson that has been learned is being implemented this time around is you can't have Sushi Swap and what are the other tokens that came up, Yams, whatever. The DeFi, as it was implemented last cycle, was wrong, because you had all these ephemeral crypto tokens that were just spinning up out of the ether, and you found that the volatility of those underlying tokens was such that it made those protocols insecure, unstable, and ultimately illiquid. This time around, we've got real-world assets. We're tokenizing the real-world assets. You know them. You live in them. You've touched them. You talk about them every day. We're bringing them to these protocols. We're going to allow you to get partial shares in them, and then you can use those real-world assets, a digital representation of those real-world assets in the form of a token we launched, to then implement that into DeFi and use that as collateral and trade it partially and get yield on that. And I think that completely misses the point too. Well, me on paper seemed good. I actually had a call. Somebody called me randomly earlier today asking me about a real world asset platform that spun up on Polkadot, and they're going to tie gold to a token. They're going to allow people to stake it and all that. And I talked the guy off the ledge, or didn't even have to talk him off the ledge. I was just trying to explain the dynamics of this market to him. And people are very confused. And I really, if you're out there and you're curious about this and you're sort of open-minded and you're joining this podcast to hear the Bitcoin perspective, I would go read Parker Lewis's Bitcoin is the Great Definancialization. And I think that's what a lot of people in DeFi, particularly those who are focused on the real world asset tokenization theme, that is going to be, it's going to be big. People are going to spend a lot of money on it. Some people are probably going to make a lot of money on it, but I think in the long term, they're missing the forest for the trees. Bitcoin, and I think Fold's a perfect example of this. Like Bitcoin as a savings vehicle, you finally have money that does not get debased over time, allows you to definancialize your life. You don't need to go out in the risk curve and create all these collateral products to generate yields. You have better money now. You can just save money, and guess what? It increases in purchasing power over time because it's scarce. People are missing that though, and particularly what I would worry in the medium to long term for these real world asset DeFi protocols is what you're looking to tokenize. Main focus is on real estate, and you're going to be tokenizing this real estate, putting it in these protocols. And I think what we're going to see over the next decade is a demonetization of real estate and flow into Bitcoin, which is a representation or an expression of that definancialization. People will recognize, are recognizing already. I've got plenty of data I can show you of people selling properties that they own, rental properties, the Airbnb craze of 2020. A lot of those people bought houses, spun up Airbnbs, realized it's an arduous business that comes with a lot of costs and a lot of headaches, and many who are first movers are beginning to sell those properties and put it into Bitcoin. And I think that trend is only going to continue, and you're beginning to tokenize assets that are being their price is being corrected to their correct value, which is a consumption good with maybe some premium on aesthetics, location, and all of that. And it's going to be a big theme. Calling it right now. There's going to be a lot of money poured into it. There's going to be a lot of tokens spun up. There's going to be a lot of people flashing. Look at what we did. We revolutionized finance. We brought all this to the digital world. But Bitcoin is the great definancialization, and all that is noise in the medium to long term.
The best thing I can tell you if you're interested in RWA protocols is read the Parker essay and all Parker's essays. Also read, there's a great Bitcoin author named Gigi, pseudonymous Gigi. If you Google Gigi memes versus the world or Gigi bananas on the blockchain, I think that it's a very succinct kind of summary of why those systems just make no sense and don't work, and blockchains are not optimized for anything that needs to be any data or any transaction that isn't endogenously enforced on the blockchain itself, right? If it needs an enforcer like a court or police or something in the real world, then you've just invented a more complex kind of database, basically, to store records. And it's worth remembering, even if we granted that there's some more efficient way to tokenize equity, to tokenize bonds, to tokenize real estate and provide access in that way, the value of any of those tokens will be entirely and exclusively related to the cash flows that can be generated from the underlying, right? People want NVIDIA stock. They don't want a specific NASDAQ token that is, only traded on the NASDAQ, and thus, that token, that, share that's on the NASDAQ has value for some reason because of that. They just want NVIDIA. So if NVIDIA is on NASDAQ, if NVIDIA is on NYSE, if NVIDIA is on exchange I just made up, people just want the NVIDIA. They don't care about your token. They just want the underlying, right? Same things here. And that's why Bitcoin's fundamentally different. People want the endogenous ledger unit itself with Bitcoin. It is an entirely closed system where the map is the territory, and that's fundamentally different than, putting bananas or real estate or NVIDIA stock or anything else on the blockchain. So important to remember that as that craze inevitably heats up this cycle.
You heard it here first. Clip it. Come laugh at us when it's blowing up, and not when it's when it's very popular a year from now. But we call our funds low time preference funds for a reason. We'll come back to you 6 years from now and be like, remember that craze? Remember when we thought that was going to happen? We'll be here, gentlemen. We got a long rip in. It was a while between recordings. I'm happy that we took some time to really dig into things here. Shout out to Will. Thank you, Will, for joining us.